Thank you for joining me. I'm your host, Robert Kraft, Editor-in-Chief of StockNewsNow.com. Today we're doing an SNNLive Newscast with Tom Tomlinson, President and CEO of Alliance HealthCare Services. We're speaking via Skype from his headquarters in Newport Beach, California. Alliance HealthCare Services is a publicly traded company with the ticker symbol AIQ on NASDAQ. Tom, welcome to the program.
Thanks, Robert. Delighted to be here today.
It's really great to have you on the program. So to get us started, let's start off with an overview of Alliance HealthCare Services.
Sounds good. Alliance is a national scale provider in the healthcare space. We focus on three different service lines: Diagnostic Radiology, Oncology Services, and Interventional Services. There's a couple of things really important to understand about Alliance. Number one, as I mentioned, we have a national footprint. Today we have operations in 45 out of the 50 states. That's really important because as we continue to grow, we've already got an operational infrastructure in place that we can add those new clinical sites to. Another important thing to understand is we're very hospital-centric. So today we're in relationship in the United States with over 1,000 hospitals. Why is that important? In healthcare today, more and more care is being delivered by hospitals and hospital-affiliated providers of care. And because we're already deeply embedded in that hospital sector, it means strategically we're positioned in exactly the right spot as the Affordable Care Act and other kind of trends are driving more and more healthcare into the hospital sector.
Okay, so help me understand the different types of partnerships that you have, as well as some of the customers you serve. Can you elaborate on that?
Yeah, I'd be happy to. So our relationship with hospitals really runs the gamut. There's a very simple kind of relationship we might have that's contractual, where maybe we're providing shared services for MRI. So for instance, we've got MRI imaging equipment in the back of a semi-trailer, and we'll pull it up to a small hospital, maybe in a rural market, and provide service to that community and that hospital one day a week. That's kind of one bookend. The relationships can become much more deeply intertwined and involved, all the way up to very in-depth joint ventures where together with a hospital, as true joint venture partners, we're operating multiple clinical sites, providing diagnostic radiology services, radiation therapy services, or different kinds of interventional pain management services. So there's quite a breadth of different business models we use. A really important part of our business is the flexibility we bring so that we can custom craft different solutions, different business structures to meet the requirements of each individual hospital that we work with.
So who would be like a competitor, for instance, just maybe to give people a better idea of like all the different things that you do serve in this space?
Sure. Great question. Let me tell you, one of the unique things about us is that we are so hospital-centric. So approximately 75% of our revenue comes from billing a hospital as opposed to billing third-party payers. So when you talk about who our competitors are, most of our competitors are independent of the hospital systems. And so they might be providing services to a patient where a patient comes in to get an MRI scan or comes in for radiation therapy services. And then our competitors are billing their insurance company. In our business model, we're more focused on working with the hospital, and it's actually the hospital that's billing the insurance company, and we're working with the hospital and get a portion of that revenue stream from them. In the radiology space, a competitor that public markets would know about is a company called RadNet, very strong operator of diagnostic radiology clinics. But again, as I mentioned, the significant majority of their business is focused on freestanding diagnostic imaging clinics that compete with hospitals in their market area, as opposed to our business model where we run diagnostic imaging clinics in partnership or in collaboration with hospitals in our market areas.
Got it. So then, okay, so moving forward a little bit here, what were some of the key milestones for Alliance HealthCare Services that you've achieved so far in 2016?
It's been an important year for us in a couple of respects. Number one, as I mentioned, I joined the company in October of 2013, and really the mandate as I joined the company was return Alliance to profitable growth. The company had faced some real challenges in the years preceding that. In addition, another key challenge for the business was that we had a 51% shareholder that was a large private equity firm called Oaktree, and Oaktree was seeking a liquidity event or an exit from that investment for reasons of their own, not specifically related to the company. And so the key accomplishments for 2016 really are several. Number one, just core business performance. The second quarter we just reported represents our 6th consecutive quarter of year-over-year revenue growth. So we've returned the company to growth and profitable growth. That also represents our 3rd consecutive quarter of growth in EBITDA. So we've hit the inflection point and are beginning to accelerate up the growth curve. That's the performance of the core business. In addition, as we reported at the end of March, we did complete, working together with Oaktree and our new majority shareholder, Fujian, the sale of that 51% block. And that's a really important development for the company and for the potential value of our shares. The fact that we had a large private equity firm as a majority owner that it was generally known was seeking an exit really was an overhang on the value of the stock. The new majority owner that we have is strategic, not transactional. They look at this investment as a multi-decade investment that they've made for strategic purposes. And so the overhang issue is removed. In addition, they open up a whole new avenue of potential growth for us because of the very large, dynamic, and growing healthcare marketplace in China.
You know, I think you read my mind, because that was actually my next question I was going to ask, is regarding Fujian Taihot Investments. You know, you did already tell us a little bit about them, so maybe you can expand upon some of the synergies that you see in working with them as a partner.
Absolutely. You know, number one, I would tell you that Fujian Taihot is actually an organization that the management team found to bring into this transaction. We're very excited about the fact that they're our new majority shareholder. The first thing I would tell you is, as part of their investment decision, like any investor, they did significant due diligence of business operations, the strategy of our U.S. business, and came away very excited, just as excited as the management team is, with the direction of our core business in the U.S. and how, as I mentioned earlier, we're beginning to show clear, measurable, demonstrated evidence that we're executing well on that growth strategy that we've outlined. So they came away, they came into the investment very excited about the U.S. business and the direction of it. We love having a joint venture or majority partner that's excited about the core strategy of the business. As a management team, that's what you want. You want the support of your largest shareholder. As I mentioned before, in addition, they're a very accomplished, existing, successful business in multiple different businesses in China. So they're one of the largest real estate development companies in China. They're in banking and insurance in China, and they have one other healthcare property based in China. And you know, as you see U.S. companies look to do healthcare services outside the U.S., the first and most difficult thing you have to do is find local market partners that understand the business dynamics of this country. Well, we know clinical operations, and we know partnering with existing hospital providers, which are useful competencies that we can extend into a new market like China. There's a lot of things we don't know about doing business in China. And our new majority shareholder, this is where they've built their successful business over the last 20 years. They're deeply invested and intertwined in business networks, political networks, and other things. And most importantly, through the standstill agreement that was put in place when Taihot made this investment, their economic interests are fully aligned with the economic interests of all of our other non-Taihot shareholders. And so as we drive success together with them, leveraging their expertise, it'll be beneficial to everybody involved with the company.
I was going to say, it's tough to globalize when you don't have boots on the ground already, but it sounds like you do. So
that's exactly right.
So what I was also curious about is, you know, what then are some of the goals and milestones for Alliance Healthcare Services moving forward into Q3 and beyond?
Well, you know, it's a good question. In our guidance for this year, we've talked about, and in our recent earnings call, we've talked about that as we get into the back half of the year, we think our year-over-year comps start to get a little bit easier. And so we're expecting an acceleration in the business in terms of year-over-year performance. So our guidance for the year clearly implies growth for the full year. So we expect to be able to add additional quarters to our track record of consecutive quarters of earnings and revenue growth. Those are certainly some milestones that we're looking for. In addition, as it relates to our China strategy, we've talked about that we're going to be very careful and measured as we look at how we participate in that healthcare marketplace. I think you can expect that towards the end of the year, we'll have some things to say publicly that outline in a little bit more detail for investors the specifics of how we think there's an opportunity for us to begin to move in to the healthcare marketplace in China and do that in a very measured, thoughtful, and profitable way.
And then, you said you came into the business in 2013. Give me a little bit about your background. How did you come into Alliance HealthCare Services?
So I've been in the healthcare space since 2002. For about 10 years, I was with a key competitor of Alliance's in the radiology space, a company called CDI, or Center for Diagnostic Imaging, which was a private equity-owned radiology business. During my tenure there, we went from being roughly 15 to 16 locations to 125. So it was a period of rapid growth, and I was their CEO for the last couple of years. I was their president and chief operating officer for about 6 or 7 years during my tenure there. When I left CDI, I became CEO of a company called Midwest Dental, which is one of the large market-leading dental service organizations in the United States. So we ran 130 to 140 dental offices in 9 states at the time I was there. So that was my most immediate prior experience before I came to Alliance. The opportunity to come to Alliance really was an exciting one for me because for all the years I'd been in radiology, Alliance was always a competitor. And so I had looked at their business and from the outside looking in, if you will, and Alliance had always been uniquely positioned to be the natural market leader in both radiology and oncology, and the opportunity to come lead that effort was a very exciting one. And so I made the move and have been happy about it ever since.
And where can our audience go and find more information about Alliance HealthCare Services?
Great question. We have a website, like most people do these days, www.aiq-us.com. There is an investor relations section on that website with all sorts of information, of course, SEC filings. We also keep usually a current version of our more in-depth investor presentation on that site. It goes into a lot more detail than we've got time to do here. So I would just encourage anybody interested to access that investor relations information.
I was going to say, who needs that? We got this video. No, I'm just kidding. But Tom, thank you so much for coming on to do this SNNLive Newscast with us. Again, I'm speaking with Tom Tomlinson, President and CEO of Alliance HealthCare Services, ticker symbol AIQ on the NASDAQ. Tom, thank you so much.
Thanks, Robert. Take care.